Hello everyone, my name is Matthew Fraley with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here, and many others, dozens of other systems. Been doing this over 20 years for individual traders and professional institutions. Now, before we get into my state of the market video, where we cover the markets in depth, I'm going to discuss about our KISS systems. Again, if you go to breakpointtrades.com, that's with 2 T's, go to the systems area. And if you go to KISS STS tables, the KISS systems are a proprietary trend following system that was developed by myself, and you can apply it virtually any instrument. For now, the public can view that. You go here, go to the tables, and we run the system on a basket of stocks. Some of these mega large cap stocks that have been leading the market, all the NASDAQ 100 stocks, all the S&P 500 stocks, over 100 ETFs. And for example, today, Tesla hit its smart trailing stop. Let's take a look at the chart. So if you look on here, Tesla, this is the KISS system on Tesla. The daily chart went long on May 19th here. Was able to raise its stop, STS, smart trailing stops, almost a dozen times here with the initial stop at 164. And it hit its smart trailing stop today at 243. You can see the system was also long Tesla back in January and then got stopped out there in March for a profit. Also, additionally, we added a favorite section so you can click the star. So if you wanted to set Tesla as a favorite, you could say I just did that. If you go to favorite sections, it'll be listed there for you. There's also a popular area where we list the most popular favorites being followed by everyone who's using these lists. So pretty cool tool. And again, only Breakpoint Trades has it. I suggest you guys start utilizing it, and let's go ahead and get started. And this is the back-end recording for our newsletter. I'm going to go ahead and start this. This is a state of the market video for June 26th, 2023. Hello everyone, this is Matthew Fraley with BreakpointTrades.com. This is the Monday, June 26th newsletter. Tonight's newsletter, as you can see, divided into 6 major sections. Before we get into the general market, I'm going to do some updates on the systems. Today, one of the SPY systems took a first entry long, the trend pullback, which I sent out a notification for after the market closed. Also going to give you an update on some of the KISS systems. For example, Tesla hit its smart trailing stop. We'll then go over the general market. We'll look at some custom indicators, bonds, some sectors, US dollar, commodities, precious metals, GDX, and trade ideas. I did add a few new trade ideas here tonight. And let's go ahead and get started. So item number 2 shows the index sector table, what transpired today. So you can see, small down day for the market, continuation from last week's sell-off. The Dow was almost flat. The Russell was up, while the NASDAQ area took the brunt of the pullback, down 1.2 to 1.4%. The S&P down almost 0.5%. As far as the major market sectors today, more sectors were actually up than down slightly. We followed 21 of the sectors here. Transports had a decent day, as did energy and oil services and real estate. Okay, quite a bit of weakness in biotech and drugs. Currencies, US dollar down 0.1% today. Cryptocurrencies, as you know, they had a big rally breakout last week. Today they were down about 1%, Bitcoin anyway. And as far as commodities, mostly to the upside here. Sugar, nice pullback, but otherwise the other commodities were up slightly. Natural gas continues to rally out of its base. And precious metals were up today, albeit slightly. Now silver, lead up 1.5% versus gold up 0.2%. GDX, gold miners were up about 1%. So they are leading the metal. And remember, The stocks lead, so you want to watch that. I'm watching for a potential confirmation of a trade low there. It's not confirmed yet, but it that area does look a little bit interesting now, as it's had a nice correction from the early May time frame, which we called. And as far as the bonds, 20-year up slightly, the 10 and 30-year were down. Next, item number 3 shows the economic news calendar for this week. Tomorrow, the 27th, you have durable orders, FHFA housing index, S&P Case-Shiller, new home sales, consumer confidence. All right, guys, let's go ahead and get started here. First off, we're going to talk about the systems. So today, out of the reversion to mean systems for SPY, remember there's 21 of these reversion to mean systems, 22 if you count the breakout, which had a beautiful long trade there from May into mid-June. But today we had the trend pullback take a first entry there, as you can see on the bottom left side. Okay, so first entry is sent out a trade notification just a little bit after the close. And remember, SPY trades liquid until about 8 p.m. So you had plenty of time to enter after hours. So that is long, and I updated the website. Next. So image number 5. So this shows you a table. These are the reversion to mean system trades for the SPY ETF this year. A lot less trades this year than last year. Remember last year we had 125 trades, I think, for SPY, and similar on ES futures. So this is the amount of trades this year. Again, a lot less than last year, at least a quarter of the trades. Again, it's just common sense. These reversion to mean systems, like volatility, when the VIX is high, they do a lot of trades, and when the VIX is low, like it has been this year, the systems don't do as many trades. But again, you can see the open trade at the top, the trend pullback entered today. So with that first entry long, you can see an image of that subsystem below there. Next, image number 6. So here's the KISS systems for the 4 major indexes, the S&P at the upper left. Again, none of these have hit their smart trailing stops. The S&P is 4287. Again, systems aren't perfect, guys. You can decide these smart trailing stops. I get a lot of questions about, do you use the number exactly? Do you wait for the close? Do you intraday? It really depends. So for the S&P here, for example, 4287, someone might decide to round that up to 4290, or maybe they round it down to 4280 or 4275, whatever. But you can see still a little bit of room on the S&P and Qs. IWM and DIA, they haven't been trending like the other indexes. And again, they've had a nice pullback over the last week and a half. They're still above their smart trailing stops. We'll see if those hold. Next. Number 7, Tesla. Tesla was one of the Magnificent Seven stocks, that have been leading this market, that hit its smart trailing stop today. Smart trailing stop was 243. The system went long back on May 19th, and you can see how the system was able to raise its stop, a good dozen times or so. So did a good job there. Next. Going back to the general market, so image number 8, here's the NYMO McClellan oscillator. So early last week, and a couple weeks ago, I was showing this divergence from the NYMO indicator where the S&P had that strong higher high, but NYMO had a lower high. And that divergence is obviously played out now from a week ago. It's produced a nice pullback in the market from early last week and coming into today. And you can see the previous times this year and last year when you had those divergences. So that played out. Next. Number 9, here's a daily view of the 5 key major indexes. Again, nice pullback here since last week. You can see the S&P is approaching its middle Bollinger Bands. That's the 20-day moving average. The NASDAQ has already hit that area. We'll see if that offers some short-term support. Next, Moving on to the S&P 500, our proxy chart for 10. Here's a weekly view of the S&P 500. And again, as you know, over a week ago, we hit that upper channel line, 44.50 roughly. We've been pulling back here. And now we'll see where we find some support. There's some support down here, around here to the 4,300 area. Also, this chart has this rudimentary cycle at the bottom, which has not been perfect, but it's been pretty good near these market inflections, highs and lows, as you can see. And, you can see how it was correctly projecting a low there in March, which we had.
Order filled.
And it's projecting a high here, basically right around here where we pulled back. Now, so we'll see how this plays out. Our thought so far has been, that we would pull back, which we're doing. We still think we'll have one more attempt higher into July. And then if we're going to have a, nice correction, it'll be sometime in the early fall. So we'll see if that plays out or not. Next. Chart 11, here's a daily view of the S&P. A lot of different trend lines here. So first off, you can see nice pullback from last week from the Tuesday open. We've pulled back to a confluence of trend lines here. So potential little support area right around this 20-day moving average. We'll see if this holds. Now, if this lets loose, that would open a door for a move all the way down to that 42.50 area, and there's an open gap there. So right now we got some support here. We'll see if that holds or not. Next. Chart 12, here's a zoomed in daily view. We've been showing this uptrend channel. Again, the previous week we tested that channel, and then on the Tuesday of last week we basically reversed off that channel area. Logical area to have a pullback, which we've gotten. Again, you have the 20-day moving average approaching, as I just showed you on the daily chart previously. We have a bunch of confluence of trend lines. So this is a big area right around here to the 4,300 area. Next. Chart 13, here's the equal weighted S&P 500. Steve discussed this on the weekend, and you can see there was a perfect symmetry move here to the high early last week where we pulled back from. But notice how equal weighted has been severely underperforming the regular market. Next. Chart 14, here's the daily KISS system for the S&P, which we already discussed. Again, smart trailing stop is 42.87. Like I said, you could decide to round that up or down, but for now, the system is still long. It went long back in March. Next. Chart 15, here's the 4 time frames we like to follow. So remember, last week I was talking about that DeMark 13 on the half day, and that has indeed produced a nice pullback. We have a little DeMark 9 there. So far we're not bouncing yet, but that is something to note. We did lose the ATR support on all the time frames here except for the daily. So that's potential support. Again, big area we're coming into. We'll see if we find some support in there. Next. Chart 16, here's a half-day chart, and you can see the channel here. Again, we stalled at the upper channel last Tuesday. Nice pullback. Now, let's talk about symmetry, guys. So the largest pullback since the March low there was about 140 points in the early May time frame. You see that? So currently, we're down about 120 points. So we haven't broken symmetry. So let's watch this tomorrow, see if we sell off, watch that symmetry, or we'll see if we bounce. The positive is that the highs last Tuesday did not have MACD divergence on a lot of time frames, the daily, half day, 2 hour, hourly. So that gives hope that we could still have another push up once this is done, but we'll see. Next. Chart 17, here's a 2-hour chart, shows you the same thing essentially. Here's a demand zone right into here. There's also support a little bit above that too. So again, we'll see where things look like tomorrow. Next, chart 18, here's a 30-minute chart. Remember I talked about this symmetry a couple weeks ago. We had a symmetry break here with an 81-point pullback into June 20th. Okay. Previously, the largest pullback there had been 65 points. So that set up a break in symmetry, lower high. So that's been playing out. Otherwise, this boxed area shows you a demand zone anywhere from right in here down to about 4,300. That's a big area. We'll see if the bulls can grab the football in here. Next, chart number 19, here's a 15-minute chart. Again, just since we put in that top at 44.48, we've been strongly trading down. We're in this strong channel. So far, just working our way lower. Next, chart number 20, here's the triple Qs daily chart. Again, as you know, it was essentially going parabolic, unsustainable. We were very overbought. And now we've reverted back to the mean. The Qs have pulled back to their 20-day moving average. We'll see if that holds for at least a bounce. If it does not, if you have a strong close through the 20-day moving average, not an intraday candle wick through it where you recover, but a strong candle down, that would set the stage for a pullback down to the 20-day moving average. But for now, we're right here at this support. Next, chart number 21, here's the daily KISS trend system for the triple Qs. Again, smart trailing stop still has a way to go. It's still long from early March when it took an entry there. Next, chart number 22, here's the 4 time frames we like to follow. Similar look to the S&P. Again, the daily, we have the ATR approaching. That's a big support. We've lost the ATR support in all the other time frames. Next, chart number 23, here's the 2-hour view of the NASDAQ 100. So the dotted line here, since we talked about symmetry for the S&P, so the largest pullback since the March lows was about 18.75 points. And if you subtract that from the top here, again, we haven't broken symmetry, but that's a potential target or something to monitor if we get some more weakness here. Next, chart number 24, here's the 30-minute chart. Again, we're just in a strong downtrend channel. So again, no reason to be a hero. Try to pick a bottom unless you see a trigger. You do have some support. You can see back here in the early June time frames running around this 357 area. So we're getting close to that. Could be an area to watch for a bounce. But ultimately, price needs to reverse and break out of this channel. Next, chart number 25, here's IWM small caps. They were slightly up today. You could see the rally. Where did it stall? Right at its 20-day moving average. So once that 20-day moving average was lost, it became resistance. And you can see how IWM rallied all the way to this supply zone, which was a target of ours back in April and May. We talked about that on dozens of newsletters. It made it all the way there. That was a good area to take profits, and prices pulled back. Now, you do have potential big support right around the 200-day moving average, 50-day if we get more weakness. Next, chart number 26, here's the weekly chart showing you the bigger picture view. Again, we did hold this demand zone that we tested back in September, October 2022. Since then, we've been forming this large coil. Next, chart number 27, here's a 30-minute chart of IWM. Again, nice steep downtrend channel. So again, you don't need to be a hero. You know, one trigger to go long would be waiting for this to break out of the channel. Again, if price weakens, guys, there are some open gaps back here that could be magnets. Notice there's an open gap from June 2nd. So, you know, if the market decides to have another strong sell-off, some of these open gaps could be targets. We'll see what happens tomorrow. Currently, futures are up slightly tonight. Let's move on. Chart number 28, here's the VIX. So as you know, the VIX has been super low this year. I mean, even with today's up move, it's 14.25. That is why the reversion to mean systems haven't done as many trades as you saw last year, but they have been generally profitable trades if you've been taking them. And you can see the VIX was up today, testing its middle Bollinger Band. By the way, I don't have it drawn in here, but if you look at the 5 RSI at the top, you did have a positive divergence there with that recent low in the VIX. So that has me a bit more cautious too. Next, chart number 29, here's another daily chart of the VIX. Steve's been showing with this possible wedge formation. We did rally off the lower portion of the wedge. And if we take out the middle Bollinger Bands, one target could be the downtrend line of this wedge. Next, chart 30, here's a 60-minute chart of the VIX. Been showing this little channel. Last week we tested the low of that channel. We've rallied back to it. We're now at the top of the channel. Kind of has a bull flag here. Look like it could easily bust out of here. So we'll see what this does tomorrow. Next, chart 31, moving on to some of the sectors. So this shows you four of the major sectors, XL with the KISS systems, XLK technology, again, still hasn't hit its smart trailing stop. Semiconductors, still a little ways. The KISS system went long back in March for the SMH. XLC communication sector, again, still holding its trailing stop. And IYT transport still holding it as well. Again, these are all available in the KISS STS tables, and they're updated daily after the close. Next, following up on some of these sectors on the standard charts, here's XLK technology pulling all the way back to its 20-day moving average, slightly undercutting it here. Next, chart 33, XLC communications, been a very strong uptrend channel, still holding that channel for now. Next, chart 34, financials. As you know, financials and banks have not been participating much in this market. Yes, they did have a little fifth wave low back there in March, and they have rallied a little bit since then, but more of a choppy uptrend move instead of a trending move. Next, chart 35, here's the bank, same deal. They put in that low, but they are not strong like a lot of these other sectors. You can see it's below, it broke the channel last week, and it's below the 50-day moving average here. Next, chart 36, transports. Now this sector looks pretty good. It's got a big potential ascending triangle here. You got a flag forming here below resistance. Let's take a look at a zoomed in view. Chart 37, here's a daily zoomed in view. Again, you can see, actually looks pretty good here. It pulled back here recently off this resistance from early February, but you have a potential flag forming now. Next, chart 38, XLI Industrials. Also, this had a heck of a move out of that coil little channel back in May. It's rallied all the way to that uptrend resistance, pulling back, but it still looks pretty strong. Next, chart 39, Materials. Looks okay as well, still holding up there. Next, chart 40, Home Builders. Up today, but off the highs. This area has been super strong, as you know. The housing market still remains very resilient. No one wants to, leave their home with their 2.5% to 3% mortgage that they locked in, a year ago, 2 years ago. Next, chart 41, XLE Energy bouncing. It did hold that little support last week, bouncing up. Next, chart 42, Oil Services also bouncing, but still overall in the pattern. All right, moving on to commodities. Chart 43, DBC Commodity Index, up just slightly today. Again, this is the weekly chart, the bigger picture view. You have a falling wedge here, 5 waves into the 200-week moving average. So I do believe this is eventually going to break out of here in a big way. But, this is a weekly chart. For now, it's been in this, year-plus long wedge. Next, chart 44, crude oil, also been weak, as you know. Still overall trying to defend this 200-week moving average. It's been testing this all year, been defending it for now. Next, chart 45, crude oil on the daily. Again, it's been below the 200-day moving average. Every attempt of the 200-day moving average recently has been rejected. For now, it's still holding in this pattern. Next, chart 46, natural gas, up again today, up 1.7%. Remember, I've been talking about this base, and it really started to move up out of this base last week. It's still overall still in this range, but nice move out of here. We'll see if it can bust out of here. The ways to play this are ETFs, BOIL, UNG, and of course natural gas futures. Next, Sharper 47, here's Boyle. That's the leveraged ETF. And again, so this has had a nice move since the early June timeframe, as you can see, percentage-wise. Next, Sharper 48, DBA Agriculture ETF, that bull flag from about a month ago obviously played out. So far, a little pullback. Next, Sharper 49, here's the daily view. Again, you can see you had almost a perfect symmetry move. We hit our target last week, exceeded a little bit. That was the area to take some profits on this, and you can see it's now pulling back. It's in the middle between the 9 and the 20, so further weakness, I'd expect a target on a test of the 20-day moving average there in blue. Next, Sharper 50, here's the 10-year Treasury yield. Again, overall still in this big downtrend channel. Right now we have a potential pennant coil setting up here. We'll see which way this breaks. Next, Sharper 51, there's the weekly view of the 10-year Treasury yield. Again, you can see the bigger channel here. And boy, if this were to break out of this channel in a big way, I did not think the market would react very well to that. Next, Sharper 52, here's TLT 20-year bonds. It's also still stuck in this bigger range for the last 7 months. Next, Sharper 53, there's the daily view. Next, Sharper 54, Bitcoin. As you know, Bitcoin rallied out of this falling wedge last week nicely. Got a little bit ahead of itself. It's consolidating. The 9 EMA is now your support. Next, Sharper 55, here's the weekly view of Bitcoin. So why has Bitcoin been rallying all year? It had a falling wedge coming into November last year, broke out of that in January, and it's been working higher. So 38% fib is up there at 35,930, which could be a target over time. Next, Sharper 56, Bito, that's the Bitcoin ETF, one of them. This had a nice wedge, broke out strongly last week, really nice trade, good volume. Again, to me it looks like it's just consolidating here, nothing wrong with it. Consolidating for maybe another push once this consolidation is done. Next, Sharper 57, Mara, one of the Bitcoin stocks. Remember I was talking about this range that it was in, very choppy range. I said once it started to break out of this range, expect a trend move, and that's what happened. Broke out of this range, had a really good move up. Next, Sharper 58, there's the daily view. Again, you can see that chop range. Again, you had a really nice trade out of that range. Nice pullback here today. I don't necessarily like to look at this candle, but the volume patterns are still pretty good looking here. Next, Sharper 59, MSTR, another one of these Bitcoin type stocks, broke out of the pattern, pulling back. This broken trend line is now support. Now we'll watch to see if it can rally off of that. Next, Sharper 60, US dollar. Steve showed this pattern that could be manifesting over the weekend. It'll pull back today. Could be a larger coil. Next, Sharper 61, FXE. This is the euro. You can see how this is done. By the way, I talked about this break in symmetry way back in November, October, and that was super bullish for the euro, which moved higher. Still up in this pattern. Next, Sharper 62, gold. As you know, gold is at a nice correction from the early May highs here. We had a rising wedge, MACD divergence, and seasonality. Gold tends to be weak this time of year. So far, we have a potential 3-wave ABC pullback. We're still above the 38% fib retracement from the October-November lows. You could take a shot here or wait for further evidence. One piece of evidence could be a trigger, such as off of a candlestick, or notice the downtrend line, purple downtrend line there on the 14 RSI. A break of that could be a trigger. Trendline breaks on the RSI tend to work very well and are objective. Next, Sharper 63, silver. Also, we've had almost a 3-wave potential ABC pullback to the 200-day moving average where it's finding some support. Next, chart 64, GDX on the daily. Again, downtrend channel. I talked about it last week. You could have took a shot at it along with a tight stop, the lows, or you could wait for some confirming evidence. So first off, the low here does have MACD divergence, as you can see. But what could some of the evidence for a upside break be? Breaking out of the channel, breaking over the downtrend line on the RSI. Those would be a couple triggers. Next, chart 65, here's another view of GDX. Same deal, but also this has a GDX GLD ratio. So again, notice the downtrend line on the ratio and on the RSI 14. So all these things could be triggers to confirm a break. Next, chart 66, GDXJ. Again, it's been working its way lower in a 5th wave. Some dojis here lately. It's not, it's not trying to rally here, but it is something to watch here. See if we can get some sort of trigger on one of these trend lines, etc. Next, chart 67, SIL. That's the silver ETF. Similar wave count to GDXJ, potentially 5 waves into this demand zone where it is trying to find some support. The ratio, watch the ratio trend line and watch the RSI 14 trend line. Next, chart 68, RGLD. Remember I mentioned this over a week ago down into this demand zone, and price did bounce, but so far it's been, muted bounce, basically back to its 9 EMA. Next, chart 69, FNV, another big gold stock. Again, both of these were down near the 200-day moving average. Moving on to individual trade ideas. Chart 70, Google. So Google's pulled back nicely. By the way, Google is near its smart trailing stop or hit it by a few cents. Note the 50-day moving average below could be a potential support. Next, chart 71, SEMO. This was a beautiful long idea of mine back in May off this little resistance here at 55.63, and this puppy has been amazing. From that 55.63 trigger, rallied up, pulled back, had a little 4th wave pullback, gap today, one hell of a move. If you're still long this, anyone was still long, I was not. Today would have been a good time to take profits on that gap. Good form an island top. Next, chart 72, ATEC. A long idea from last week broke out on big volume today. Again, the clue was the move on Friday on the big volume bar. Really nice follow through today. Next, chart 73, DO, Diamond Offshore. It's been on our list for a while. Potential coiling pattern, energy play, driller. It hasn't powered out of this pattern, but finally today had a little breakup. Again, it still hasn't taken out the highs, but at this time you could have a swing stop basically at Friday's lows there, where you see the dotted line. Next, chart 74, CVAC, long idea of ours from early last week out of the coil, really played out nicely. Next, chart 75, SOUN, SoundHound, one of the AI stocks, had a heck of a breakout last week. Was up today, but well off those highs, but definitely gave you a trade. Next, chart 76, LRCX, coiling pattern. It's been on the list. Tried to trigger today, pulled back. Volume was just average. Again, this is still one to monitor. Next, chart 77, MDXG, one from last week. Still hanging in there. Pull back today, but it's still above the resistance trend line. Volume was lighter on the pullback. Next, chart 78, ZBH, long idea from last week. Never triggered. It's still valid. Next, chart 79, IDXX, long idea from last week. Never triggered, so it is still valid as well. Next, chart 80, UNM, a long idea from last week. Still valid as well. Next, Jarbor 81, CLSK, long idea from last week, pulling back from that upper resistance area. It is still valid, one I'll be watching. It's very whippy here. Could be forming a bigger coil. Next,
Order filled.
let's talk about some new setups. By the way, in case you wondered what that order to fill is, I have some of these automated systems running on my side, and one of my systems, 15-minute ES futures, traded along off a MACD KISS stochastic. So that's what that was. Looks like it's still long one contract here, but anyway, that's what that was, in case you were wondering. Anyway, new setup here, Jarbor 82, SES. I like this pattern, good volume, a little channel flag, one to watch, cheap stock. Next, Jarbor 83, ADMP, was posted by one of our astute members. I made this 2-hour chart. Really nice base here. I like the look of this. Next, Jarbor 84, CPRT, breakout idea over this 89.90 area. Next, Jarbor 85, DBI, recently breaking out of a little coil pennant here. Up here around the 200-day moving average would be a target. Next, Jarbor 86, AOS, little breakout idea. Strong stock, one to watch. And that'll do it, guys. All right, that'll do it. We will see what happens on Tuesday and the rest of the week. Take care, everyone. Have a good evening.